Hi everybody, my name's Phil Strong, thanks for joining me today. Today someone's written a question and they've asked me, how do I calculate what ratio I should spend on my mortgage compared to my wages? So another way to say this is, what percentage of my wages or my income should I commit to my mortgage? Now this is obviously someone that is aware of some old school calculations around mortgages, and I just want to explain why this view is not very healthy, and then show you a way to look for it in a positive way. Okay, so there's two things I'm going to say about negative, and then I'm going to give you the positive. Is that okay? So, first thing is, in the old days, when applying for a mortgage, the banks used to have this idea that you couldn't really afford to borrow more than 3 or 4 times your income, which is ridiculous, because they were just basically saying, well, if that's your income, you shouldn't have 4 times that, because you can't afford it. They have no idea about what you're spending your money on. So who are they to make that judgment? You might live on, boiled rice and corn for food. So you might, not spend a lot and therefore be able to afford a lot more. See, you can just see it's a ridiculous formula. What they were saying is, if you earn $50,000 household income, you shall not borrow more than $200,000. And the other reason that it's ridiculous is because it doesn't take into account the interest rate. If the interest rate was at 2%, you could afford to borrow a lot more. But then the risk was that interest rates would go to 10% and your costs would go up and you'd be in trouble. So that's why that's just an absolutely ridiculous way to look at it. So don't do that. The second way that used to be used by banks and mortgage brokers was they would look at the percentage of your net income and how much of your net income was going towards your fixed costs. And a ballpark figure used to be, when I was in lending, we used to allow people to spend 35 to 40% of their net income on their fixed payments, which, the mortgage and the rates and the insurance. And that's a lot. That's like over 1/3 of the income going on your fixed expenses, which is quite a lot. What happens was it got stretched to allow people to borrow more than they could afford, and the same problem happened was that when the interest rates went up, they got in trouble. And so I strongly urge you not to look at this as a way to borrow money. So these are the two negatives. Here's the positive, and this is the way that I'd like you to think about taking control of your finances. If you have sat down and completed the exercises to create your plan for your money, then one of the expenses in your budget will be your mortgage. And you should know exactly how much you have to contribute to your mortgage each week, fortnight or month, depending on how long your budget is for. And on that basis, you should structure your loan to fit into that. Okay, so what that means is if you've allocated, let's talk monthly, if you've allocated $2,000 a month for your mortgage, then you need to know that your mortgage is going to work within that. Alright, it's a totally different way of looking at it. It's like saying, well, how much can I afford, therefore what should I go and buy? It's not common, and people look at that and go, well, that's silly, I don't want to do it that way. And that's the emotional side coming out. They'd rather go and buy the next house up on the chain and then have to borrow more and possibly get into trouble. So what percentage should I borrow? Irrelevant. How much of my income should I spend? Not relevant. You need to look at your budget as a whole, the entire picture. When you look at the whole box and you then say, well, how much have I got for my mortgage? That takes into account your personal choices around giving, around savings, around achieving goals, around family, around spending money on your kids, around holidays, around giving away presents and gifts at Christmas time, and taking the whole picture into account. And that's much more productive for you. And it means you won't get in trouble either. It means you'll have a mortgage that you can afford and enjoy the rest of your life. You won't be strangled by your mortgage anymore. Okay, so I hope that's helped you. I hope I've got rid of some of those myths of the old days, and that you can be in control of setting the budget for your mortgage so that you're in control and you pay it off much faster. Hey, my name's Phil Strong. Thanks for joining me today. I look forward to seeing you again real soon. Take care.